Good morning, traders. It is Thursday, July the 11th. Taking a look at the charts, start off with the US dollar index because really it's kind of driving the market at this point. Obviously, the Fed talking about a rate cut is definitely going to lower the dollar short term, and we saw a huge pullback yesterday in pre-market. A little bit of surprise news that shocked the market, and the dollar fell, and of course, money piled into equities and into precious metals. Falling dollar definitely helping lift precious metals going forward here. And you can see here a big pullback yesterday, and we came right up into a resistance area on the chart. We were kind of expecting some type of resistance or pullback at that point. It's also more or less a Fibonacci measured move that if we were to throw the low to the high down to this low, you can see it's 100% measured move, measured pullback on the charts. We had the rally up, we had the pullback, and it hit the 100% measured move, which is resistance on the chart. So pullback here, perfectly normal. We might see it pull back a little bit more, but overall it is back into an uptrend, and we could very easily see the dollar continue to move higher going forward after we see investors globally kind of readjust their portfolios, knowing there's potentially a rate cut coming, and it might falter the US dollar for a little bit. Uh, Now, if we take a look over at gold, which obviously goes the opposite direction, gold's been falling in this channel here, broke out, started to rally, and we've had these lines drawn in the sand. You can see every time it gets to this level, we get a wave of selling. It's hit that 3 times. You can see this morning gold pushed up into this level, and yesterday it was just chaos. So many people freaking out that gold is breaking and rallying and never going to look back. And the gold only really popped 1.5% or so. It's stuck in this range. It's under resistance. It isn't going anywhere at this point. Yes, it looks very bullish, but it's still stuck in a consolidation phase. And if the dollar starts to firm up, we're going to see gold and miners continue to trade sideways or pull back. If it does start to break out, we may just jump on the train and get back in for a trade and play a breakout. It is starting a new bull market. In bull markets, fresh bull markets, you can play breakouts, and they usually have a lot of follow through moves to the upside. So, I mean, you can jump on a trade breakout, it could continue to run for weeks. So, not too concerned about that. I am hoping we're going to see a pullback in the gold market and a bigger consolidation. And let's just take a look at the recent chart of gold. It's kind of been chopping around in these conditions where it's got oversold and then came up and hit some targets and it got into a cycle top, pulled back. We've been anticipating gold pulling back for a little bit here. If we look forward here, there's still potential for this downward bias. You can see our cycles here. We talked about it when we got in and then we got out, and we've been looking for this our cycle analysis pointing to the lower trend here. Obviously yesterday news base popped, so it kind of bucked the trend, but overall we were having an upward bias. Gold has gone up, and now we're at resistance, as you can see across this chart here, and we could very easily see gold pull back and consolidate, and who knows, if it breaks this previous low over here, we're going to see a nice flush out. We'll see how things unfold, but overall, again, we're still bullish on gold. I do feel as though this will ping pong around. Maybe we get a washout, but eventually I think we're heading up to that 1550, 1750 potentially over the next few months once this has been digested and we can clear out this resistance area. Now, if we take a look over at silver, just move the silver chart. Just looking at silver again, it's had a nice run. It's consolidating. It's got this inside bar. Inside bars mean it's got one big red bar. These are all inside. It could very easily have a big red bar, come back down to the lower end of the range or beyond. So we're just letting the market digest and do its thing. If we look at silver, it has gotten oversold a couple times. It had an oversold bounce, got oversold again, rallied back up. Looks like we could see a little bit of a push and a peak maybe over the next session or so, or a topping formation get formed. But again, still struggling in this bull flag, and it's got a bearish formation just because these are inside bars. This is what an inside bar looks like. All these bars are inside this much larger bar, and at any point you can get a big move to the downside, the same distance of this bar, and it could flush down and cleanse the market. So we'll see how things unfold. Again, I know some of you have been shorting and buying puts and trying to play the downside on gold because they said it was going to pull back. You got to keep in mind when I say it's going to pull back, I mean, we're looking at these charts here. We're looking at just a minor pullback. It did pull back. It's bounced again. It might pull back a little bit. You don't want to be shorting gold and silver, especially in this early in a bull market. I mean, we're just starting. You wait for a pullback to get long, to add to a trade. You play the breakout. You don't short something in a bull market unless you get a really good setup. Again, the cycle analysis, if we just look at this chart, the cycle here, these blue lines, the cycle analysis is giving us a downward bias. Doesn't mean price is going to fall down to this level. This is just, if these cycles are trending lower, it means we should expect in a rising market, which we are in a bull market and an uptrend for gold. If the bars are green and the cycles are going down, it means price may just trade sideways, or it might pull back a little bit, but it's not going to, it shouldn't collapse. It'll be very muted. So you got to be aware of that. What we're looking for are these cycle lows. That's when you want to start to be getting into positions. You get a cycle low because the market will rally very quickly off a low. And when the cycle's going down, it'll just chop around or consolidate. It doesn't mean it's going to actually sell off in a big way. So that's where we are in the grand scheme of things for cycles in gold. Now let's take a look over at energies. Natural gas moving up here. We got an upside target somewhere around the 255. It could end up popping, extending to. Wish we kept a position in here, but wanted to keep risk fairly low. It was showing signs that it could have a really big volatility here, but overall, it looks like it's ready to pop and continue to move up to the 255. We'll see if it gets up there, and then it'll probably pull back and have some big volatility, consolidate, potentially give us a launch pad for another move higher. Take a look at crude. Big pop there yesterday. We have a 62 upside target, a max upside target of 64. Overall, it had a lot of mixed signals. The trend was up. You can see here it ended up getting oversold. We did get long and we took off some profits. We got long somewhere down over here. We took some short-term profits there, short-term profits right at the top there. And the market pulled back just enough that when we tightened up our stop, we were kind of hoping it was going to continue to pop and really extend. But we ended up getting, actually, we closed that trade right near the top. It would have been nice to keep the runner. It is continuing to go higher. But if we look at this bar, this was an inside bar type of day as of yesterday in pre-market. Price was trading right at this level, and it could very easily have reversed and gone back down. Overall, it's extending to the upside. We're going to start focusing on some more trend trading positions, meaning we'll get into some of these trades and more or less we'll hold a small position. As long as the bars are green and trending up, we'll have a small long position to ride the trend for much higher gains, and we'll do a couple of these. We'll scale out on some of these pops, these first levels where the market could potentially roll over and start to crash. We want to make sure we take some money off and move our stop up, but keep a runner with the overall trend. Taking a look over at, let's pull up GDXJ. Just so you can get a visual for these. Obviously, they're really popping and outperforming. I talked about this yesterday in pre-market, how the gold miners outperformed gold substantially the previous session, and I talked about this was before the move happened yesterday. I said the way that gold miners moved yesterday, the previous session, looks like gold, physical gold will have a bounce or some type of move, and of course it did. I mean, a lot of people say it was based on news, but the markets always lead news. And so this was our insight for yesterday. I was expecting some type of bounce. Our cycle for gold was showing an upward bias. And of course, the news came out and we saw gold have a pop. Anyway, miners are trading right up at resistance. In pre-market, they have broken out and poked up. They have pulled back a little bit. We'll see where things go. If we look at the short-term chart here, you can see we've got this high on the, obviously, this level here. So the market's going to gap up. At this point, it looks like it's going to gap up. It's going to be in resistance. It's probably going to be, actually, it will be oversold. This red hashtag here, this means we're trading in a very lofty level. There could be money coming in to sell and unload profit-taking levels. So the fact that we're gapping up in overbought territory, we could see a gap, a pop and drop. We could see price reverse and come back down. And we could see miners chop around in a huge range going forward, but we're keeping our eyes peeled for a potential breakout, and if so, we might have to jump on the train and get on. But that's just the way trading is. Long term, you should definitely be holding metals and miners with a long-term portfolio, but as a trader, we don't want to be holding these things. We want to trade in and out. We don't want to be carrying drawdowns. Gold miners could very easily correct and actually go way beyond what most people think, and they have been for the last 6 years. So we're not just going to buy and hold and hope. We're going to actively trade, keep our risk down, and you don't need to catch every wiggle in the market. We just want to catch the middle safe chunk of the trends. Last but not least, let's just pull up. Actually, you know what? I wanted to pull up a chart of some of the leading stocks, indicators here. The Russell 2000. Kind of struggling. It does have a bull flag, but it's been underperforming, nowhere near the recent highs. If we zoom way back, nowhere near these recent highs from last year. It's struggling, and small caps tend to lead the market. So money's not piling in to the small caps. And if we take a look at industrials, they kind of been underperforming a little bit, not quite as much, but interesting to keep an eye on. And also the transportation sector, IYT, this is the ETF, again, far off its previous highs from last year. And this looks like it could be a huge bear flag if it's underperforming. Big down day yesterday. And if the transportation sector is underperforming, that's not a good sign, because they see the orders, they see production, they get a good vibe on what's going on globally in sales and shipping. So really underperforming here. So we've got to keep our eye on all these three things. They're underperforming, and they're an early warning sign that the market is getting weaker. And of course, that goes perfectly in line with miners and metals outperforming the stock market. These are the things that happen just before a bear market usually takes place. The last 2-3 months of a bull market in stocks, we see these type of things, and miners outperform. So got to be very aware we're close to something pretty ugly that's going to catch a lot of people off guard over the next year or two as potentially a bear market and new crisis unfolds. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.